What is going on, guys? Welcome back. It has been a while. I am sorry, I have been missing in action, but I'm back and we are gonna make some money moving into the end of this year, which you can see we've already been doing because we are currently up $21,000 on the year just on my Tasty Trade account. This is the one that I grew with you guys on the Discord. Link obviously to that in the description. But today I'm going to be discussing a trade that I took recently on CONL, CONL, which is the 2x leverage version of Coinbase. Now, the reason I like trading CONL is because if you look at the share price, it's only 50 or $48 per share, whereas Coinbase is like nearly $300 per share, which means if you were to sell options on Coinbase, you need a lot more collateral, whereas if you're doing it on CONL, you need less collateral, but you're getting a similar gain because it's on 2x leverage anyway. So this is a very good option selling strategy for the smaller accounts. Now, as you guys know, with the poor man's covered call, we are not buying shares. So we do not need to buy 100 shares of Coinbase. We don't even need to buy 100 shares of CONL. Now, if we were buying them on Coinbase, obviously that would cost the guts of like 28 grand or something right now. On CONL, that would cost $4,862. Now, we didn't do that. What I actually did was I came in to the options chain and I went 433 days out and I actually bought an in the money call. I bought a leap option. I bought the 22 call. Now, I paid for this, if I just get the Discord screenshot up here for you guys. For this, I paid 27.38. Okay, I paid $2,738 to open this up. And as you can see right now, it's actually worth at the mid price $3,250. So it's already up a good amount. It's already in good profit. Right now, this leap alone is up $512 in profit, and I only bought this a couple days ago because obviously crypto's been having a very, very nice run. However, I didn't want to just buy options because I don't really like being an options buyer. I like being an options seller and collecting monthly and weekly income. So what I actually did was on this same signal, you can see that I don't know why that says stop. It's supposed to say STO. I sold the 50 call for the 20th of December. So if we come in here and we go to the 20th of December, you can see I sold the 50 call. And how much money did I get paid for this? Well, I actually got paid $598. So call it $600. I got paid $600 for opening this call. So what does that actually mean? I'm going to try and explain this to you in a really simplistic term. I'm going to make an in-depth video on all the Greeks and stuff for per man's covered calls, but I want to try and explain this trade to beginners and people who don't really understand what per man's covered calls are, like the most basic way possible, so you guys get a clear understanding. So what happens when then in this whole trade, instead of the trade costing me $2,738, it actually only cost me $2,140. But that's not really the point of this. The point is I bought this leap option so I can sell these monthly calls and collect this credit every month. Now, what happens is I've just bought this leap option and I am now collecting $600 into my pocket from selling this call. Now, what's the worst thing that can happen there? What is the downside to this? Well, my gains are capped at $50. So let me just show you how this works on option strat. So this is actually the exact trade I've got set out. I've put in what exactly I got filled at on both of these, so you can see how this is going to play out at expiration. So what is going to happen is if CONL comes up and expires at my week or my monthly expiration of the sold call, if it expires at around the $50 mark, you can see my max profit is $1,180. If it expires below 50, then obviously the profit it sort of like spikes up here to the peak where the short strike is. Now, what I want you guys to remember is if we close on expiration day just below $50. That means this 50 call will expire worthless. I get to keep my leap option that I paid, and I can go again. And the beauty of it is, if the price is higher than it was when I originally sold that call, that means I can go closer to the money and collect more premium, or I can go about the same distance out of the money and have way more capital appreciation. So what this looks like is, you can see we have a cap on our profit, and then because this isn't shares, because it is a leap option, the profit will deteriorate slightly the further and further and further it goes out. Now, the reason being is because the delta values are not 100, because it is not it's not shares. Okay, you're not actually trading with shares, so this is what you've got to play with. You know, it's going to cost less than shares, but you've also got a little bit of risk as it starts to blast parabolic. But however, you can see the worst case scenario is we just start to chip away at some profit. I don't think CONL will ever get anywhere close to these prices anyway. So what would it look like if I never sold the 50 call? Well, this is what it would look like. So you can see you would have an infinite upside. You have infinite upside. So if CONL was to hit, let's say, $70 by the end of the month, whenever my expiration is, or sorry, by December 20th, then what you could see is I wouldn't have a call there. So even after December 20th, my profit could be exponential. So it's not capped at 1.2 at 50. Instead, I can go all the way up. So if it hits $70, I'd make $2,000. But that's not what I want. I just want to make income off these leap options. And that is exactly what this here does. So I'll show you guys exactly how to set this up if you wanted to take a similar trade. So what you would do is you would come into CONL, and if we were going to set one of these up at today's price, we would come in here, and I like to buy the leap options about a 90 delta, maybe even in the 80 delta range. So let's actually experiment a little bit, and let's go in the 80 delta range. So let's buy this one here, the 38 call in the money. We're going to buy this. You can actually go shorter time, so let's go for a shorter time frame. Let's go the 223 days out, and let's buy an 80 delta. So right here, we can get a 35 call. So the 35 call is going to cost us $2,330. But now we've got to make sure that this is going to work right, because this isn't just like covered calls, because we do have upside risk too if our deltas aren't right. So we're in CONL, and we are going to buy the 35 call. I think that was, let me see. We're going to buy the 35 call June 20th, 2025. Just come back in here. June 20th, 25. There we go. Oh no, yep. June 20th, 25. 35 call. And then, as you can see, here's our profit. So if we go, let's go. This is at the expiration of the contract. So you can see, even if it was like, say, for example, in a month's time it hit, you can see right now you'd still be in. If it hit $50, it'd be pretty much break even. If it hits 60, you're up 800, and so on and so forth. But that's not what I'm interested in, because I want to make income, as I've said. So we're going to come back to here, and now let's see what we can sell against this and try and collect some money. So if we go 41 days out, well, look at this. Let's try and sell the 60 call. So if we sell the 60 call, it pays us about $540, $550. So now the whole trade is only costing $1,775. So let's put that in and see what happens. So we're going to sell the 60 call for December 20th. Back in here. Add position. Sell call. We're going to go 60. And we're going to change this to December 20th. Okay, here we go. So here's what this looks like now. So you can see we have a max profit of $1,367 and only a max loss of $1,775, whereas if we had bought shares at this price, the max loss would be $4,800, obviously minus the premium you receive for selling the covered call. But in my opinion, from a risk to reward standpoint, this is so much better than regular covered calls, because you're saving yourself a fortune. Your percentage return is a lot better, and if you were to do shares on this, your risk technically is higher, because within a couple months of doing this, you can pay for this whole leap option, and the leap option will be free. It will pay for itself. So guys, that is pretty much all I wanted to discuss in this video. Very quick one. I just wanted to bring this to you guys and show you how you can make between $600 and, in this case, $1,367 per month, or sorry, per 45 days at the minute with this contract I've selected. But even still, same thing, same goes. If you're not in the Discord already, guys, make sure to join up. We have an incredible track record at the minute. Here is our trade history. You can see all the little diamonds of the wins and the little red X's of the losses. We probably have a 95 to 99% win rate. It is just crazy at the minute. It has been absolutely perfect. And I hope to see you guys in here soon. And thanks for watching. Peace.